Good day, everyone. Welcome to another edition of Performance Management. Right, in today's class, we shall look at a new topic, which is budget. Now, the question is, what is budget? A budget is a quantitative plan prepared for a specific period. Right, you may prepare a budget for 2 months, for a year. Right, it depends on the objective of the project. Right. So, having defined a budget is a quantitative plan prepared for a what? For a specific period of time. Having defined the budget, what are the purpose? Why do you have to prepare a budget? Please, can someone tell me why do you have to prepare a budget? Please. Why do you have to prepare a budget? There is the advantages or a purpose of budget. You can tell me. Hello, class. This class should be an interactive class, right? Hello.
Hi, sir. For planning purposes, sir.
Yeah, for planning purpose, right? That's a very good one. That is one of the advantages or the purpose of budgets.
To be able
Okay.
to compare actual with the budgeted.
Thank you so much. That is what we call control, right? You should be able to say, okay, what is the actual? Do you have a favorable budget or adverse budget? That's a very good one. Another one.
To forecast future plans.
Thank you so much, Musa. Very, very good. To forecast what future plans, right? You need to prepare a budget to look at it if this particular program would fit in into the system. Please let's continue. Others will join us. So, like you all mentioned, that the advantages or purpose of budget, one of it is to motivate the managers. You know, when you set a budget and they were able to meet up with the budget, certainly there is something that will attach to it. Is that not so? Something will attach to it. So, because of the benefits, and that is why it is important to prepare a budget at the beginning of every financial year, right? So that's fine. So we need to move ahead to what we call budget manual. What is budget manual? You know, budget manual, when you go to some organization, you will see a manual book, right? That contains the guide on preparation of a budget, right? That is what we call budget manual, right? That provide a guide in the preparation of a budget. Most especially when you go to ministries, government agencies, and parastatals, you will see it there. So that is budget manual. There is another one called, I'm defining the terms, some of the terms in budgeting. There's another one called principal budget factor. The role of a principal budget factor is to ensure that you have not overstated the figures of sales. They monitor your sales unit to ensure that it's in compliance with the with what is being stated. That is principal budget factor. What is the budget committee? When you prepare a budget, there are committee that will check the budget, whether this budget is in conformity with with the policy, or if it will meet up with the objective of the company, right? We call them budget committee, right? we all know most of us work in an organization whereby when you prepare a budget, there'll be a committee that we actually look at it that, okay, is this in line with the organization objective or not, right? That is what budget committee. We move ahead to the process or budgetary control. You know, in order to avoid budget padding, you have to put a control in place in order to reduce wastage, right? And there are what we call what is it called? Budgetary system. Fumilayo, it could be your network. Please confirm. Olalekan, can you hear me? Others should confirm if they can
Yes,
hear
I can hear you. I can hear you, sir.
you. Okay, probably you should log out and log in. It could be network, right? What I'm saying, I'm not displaying it, right? I'm just saying it based on what is all about budget. Like, I'm just giving you a summary because we don't have time. I'll send you the notes, you go and read the other part, right? Now, where are we? Budgetary. The budgetary system, right? So because of you want to eliminate wastage of resources, you bring in what we call budgetary control, right? Then there are system of budgetary control system, right? Budgetary what? Control system. One of it is what we call a zero budget. The second one is what we call incremental budget, right? Planning budget, right? So we have zero budget. So these are the budgetary system you put in place in order to what? You want to minimize what? Wastage of resources. These are what we call budgetary system. They are not type of budget. Class, I've explained the budget, the purpose or objective of a budget, the terms in budget, the budgetary budget manual, right? Principal budget factor, then budget committee, budgetary control, and budgetary control system, right? You will see all that in your notes, right? You will see everything in your notes, so you just need to go and read it up, right? So we can move. Then the budgetary system, control system are not types of budgets. Class, there are the types of budgets. So we'll move types of budgets. Right? Cash budgets, functional budgets, this is where we need to pay more attention. All other ones are reading theory, right? Master budgets, flexible budgets. Now, class. In today's class, we just move ahead to cash budget. Class. What is cash budget? What is the objective? What is the cash budget? Your cash budget is you want to know the cash inflow. What is the objective of a cash budget? The objective is for you to know if the organization have sufficient cash balance at the end of the period of that budget. You prepare a cash budget for the year 2025, right? As at January, you prepare a cash budget of at the beginning of the year. You present it to the management, to the budget committee. It depends on the organization. What is the objective? It's for you to know if you will have a cash balance or a cash deficit at the end of the period. So that will make you to adjust your budget. And you always, sometimes organization prepare a cash budget because they want to borrow money from the bank and they want to project that, okay, are we going to hello? Yeah. Got it. I swear, I dey vex for you. I swear. I come there around there, this thing. They dey tell me say you don't come out.
Okay, my phone be no zero. My phone be there for my pocket. I don't think phone. I need to extra market.
Then they say I'll call you later with that. So that we'll go link up. I'll call you later so we'll link up. Yeah, thank you. Hello, class. Are we still there?
Yes.
Yes.
Okay, thank you. Now, most organizations will prepare a cash budget to forecast for the future because they want to borrow money from the bank. They want to know if they will be able to have a cash balance if they borrow money from the bank so that they can use it to what? To pay at the end of the period. Right? Some banks will ask, okay, bring your budget. Let's see. Will you be able to pay at the end of the period? Because they want to also know all this. So that is the objective of preparing a cash budget. You want to know it is a cash flow. You want to know if at the end of the period, you will have a budget surplus or deficit. You have a balance at the end of the period or a deficit. That is the objective. And when you want to prepare a cash budget, what are the things you should be looking at? There are just two variables. Just two variables, class. Your inflow, cash inflow, you subtract it from your outflow, your cash outflow, right? You have net cash flow, right? If you have a cash balance at the end of January, for instance, you put it here, class. Now, what is this? Any day, anytime you want to prepare a cash budget, your cash inflow, also known as your receipt, right? What comes in, right? Then your outflow is your payments. Your outflow is your what? Is your payments. Class. Now, when you subtract your inflow, what comes in and what you pay out, you have net cash flow. When you have a net cash flow, probably you are preparing for January. For instance, this is for January. Why this will be February? Class. This is your net cash flow. It's positive. You have a cash balance, cash. You add it, you have your closing balance. Wow. You have your closing balance, class. The closing balance of January will be what? Will be opening balance of February. We will get there. But any day, anytime, you want to prepare a cash budget, it should be your inflow, which is your receipt. What makes up your receipt is your revenue, your receipt, your debtors, right? Your total debtors for the period. Maybe you make a sales on disposal of an asset, it becomes your inflow, right? Then minus your outflow. Of course, you will pay salary, right? You will pay salary, advertising, rent, and all that will become your payment. Last, take note that depreciation does not form part of cash budget. It is a non-cash item. When you see a depreciation, it does not form part of your payments, right? You exclude depreciation when you are preparing your cash budget. I hope you are taking note of that, right? 2, your provision for bad debt is excluded in the what? In the preparation of your cash budget. It will not form part of your payment. Your bad debt, right? Your provision for bad debt and depreciation, the two. Provision for doubtful debt or provision for bad debt and your depreciation should not form part of your cash budget. Should not, provision for bad debt, your depreciation is an expenses. Someone will look at it that, oh, it's a payment. No, it is a non-cash item, under the cash flow statement. But this is not cash flow, but it does not form part of your cash budget, right? So your receipt, any day, anytime you want to prepare a cash budget, it should be your receipt, which is your inflow, your what comes in, your sales, your total debtors, that is your receivable, right? Your sales, maybe you dispose an asset, gain on disposal of assets. Investment, probably you make some investment opportunity, maybe you invested in shares, right? Will form part of your receipt. Your payment is your expenses, exclude what you pay out. What you will pay out, is a budget. What you will pay out in January, right? Exclude your depreciation and your provision for bad debt. So when you subtract the two, it gives you what? Your net cash flow. Your net cash flow, watch out in the question if you have a cash balance. If you have a cash balance, you add it. When you have a cash balance, you add it, you have your closing balance. This cash balance could be opening balance, opening cash balance. You add it. So it gives you what? Your closing balance. The closing balance of January will be what? Will be opening balance of February. And this is all about your cash budget. In addition to this, cash budget is all about English. If you understand English, the question could be that they will pay 20% in January and pay 40% in the month following, right? It could be that the total sales is 50 naira. They will pay 50% in January, pay 20% in February, and pay 30% in what? In March. Can you see it? So different way of present of a cash budget. But all you need to do, whether 4 will be paid in the following month, or 70 will be paid in the month following, or 30 will be paid in 60 days or 90 days, right? All this is the format you need to use for anything you want to do, right? Class, am I communicating, please?
Yes, sir.
Yeah. This is a cash budget. There are types of budgets. The cash budget, the functional budget, the master budget, and the flexible budget. The other written parts of the budgetary system, you read it. When I send you the material, you read it, right? You read that one. So what is the objective? I repeat, let me repeat this again. What is the objective of preparing a cash budget? You want to know if the firm or the organization will have a balance at the end of the period. Maybe they will have an overdraft, a negative cash balance in January, have a positive balance in February. Because when you have a cash balance, it means that you have enough cash to pay your debt at the end of the period. Right? In some questions we will be looking at, they will test your knowledge on liquidity ratio. That is, when they have a cash balance at the end of the period, calculate the liquidity ratio. We'll get there. So all you need to do when you want to prepare a cash budget is for you to follow this format. Simple format. Class, are we good?
Yes, sir.
All right. Okay. With our time, because I, oh, I have plans for this class, but unfortunately, something went wrong, but it's fine. Fine. Well, if the question is, so I have a past question, but I don't want us to go into that other past question because I want it to be a fresh, right? I have a question under the cash budget that we will solve tomorrow, but today, let's see what we can do together, right? So, trying to download this question, this foundation question. Let's use it to test our knowledge. It is a foundation question, right? Don't know what happened. Oh, wow. Okay. Why okay, can someone look for a question for us on cash budget? I don't want to rush this part. This is also one of the foundation question of cash budget, so that we get familiar with the world of 60 days, 30 days, and the amount of sales. Please, can someone send a past question? Let's see. Can do.
Must it be
Send.
foundation question?
Yes. Or just send the skills. No, send the skills. Send skills. Chris, are you there? Chris,
Yes, I'm here.
I made 2016 question too.
that is the question of May 2015. I know that question. I don't want us to go through that deep. Chris,
Yes, sir.
okay, you are not with your pack. Wow.
Yes.
Oh, oh my God.